Hey guys, what is up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla stock. Let's go over what is happening in the market today on an absolutely wild day in the markets. Pretty wild day and a pretty wild way to start what could be a wild week as well. And so yeah, all that being said, let's just jump into it. Let's jump into the charts. I'll give you my thoughts moving forward and all of that good stuff as per usual. But ladies and gentlemen, if you enjoyed, please don't forget to hit that like button. This is not financial advice. I am not a financial advisor. And of course, if you do enjoy my technical analysis, my thoughts on the charts, I do share my thoughts with my members every single day the market is open live. I mean, as the market is trading, right? Constantly sharing updates, especially today on NVIDIA. Quite a lot of updates on NVIDIA today for obvious reasons, I think. But nonetheless, for $3 a month, you get access to everything I just said. So Tesla updates and sometimes other stocks, or for $5 a month, you get access to the second tier, which includes everything I just said in the first tier, plus NVIDIA daily updates. But anyways, jumping into it. Tesla closing the day down. Honestly, not too bad of a, we'll just say about 2.5%, closing at $397 per share, which honestly, compared to the market, could have been worse. Absolutely could have been worse for Tesla. So it actually held up decently well. But to be fair, QQQ is dropping at pretty obvious reasons. NVIDIA probably being one of them, right? But nonetheless, Tesla, overall relative to the market, doing pretty all right for itself. Now, what does this actually mean moving forward? Like I said, this is a big week, right? Tesla's, of course, reporting their earnings on Wednesday. I'll be real with you, right? It is a question mark. It is absolutely a question mark because Tesla, this is the first time in the history of the stock that this Tesla is reporting its earnings at, while being essentially $400 per share roughly, right? It's never been this high and reported earnings. So it's absolutely unquestionably a question mark, really, right? But let's just try to dissect what we can from the chart so far. So I've been talking about for quite some time that, I overall want to see a move down to about $390 per share. And that's exactly what we got today, right? We went to pretty much exactly $390 per share. And so far we actually held and closed with a doji candle, which could signal a reversal, but obviously more needs to be seen for sure. But the point I'm trying to make is the fact that we actually did finally come down to that level I've been talking about for about a week now, right? I've been talking about 390 for like a week and we're here. I did enter a small position, mainly because I do believe that there is a potential run up into earnings, which of course is on Wednesday, but we could get at the very least a small run up into earnings. I'll give you my levels for that, of course, as per usual, very soon. But the way I look at it is this, right? Obviously, like I said, we're still in this overall channel, right? We're still in this overall channel here, right? And at the very least, we could potentially get a nice little rally back up to even potentially as high as $440 per share. Now, I don't think we'll go there pre-earnings. That could be the post-earnings rally, right? Back up to somewhere around here. That does become a real possibility. But I guess the way I'm looking at it is as long as Tesla essentially continues to hold, again, about 2 days low, right? 390, of course, not exactly 390, like, oh my God, if it's 389.99, it's all over. No, right? Around 390, right? Give or take a few dollars, of course, naturally, right? It's looking pretty good. And I am favoring a short-term bounce, whether or not that's post or pre-earnings, I'm not 100% sure, but a bounce nonetheless. Now, if we do, this is the bearish side, right? The bearish side is this. If we do lose, again, about the low of today to maybe as low as even $380 with a bit of a buffer, of course, that's where things, in my opinion, start getting much more ugly. Why? Well, because the overall bearish thesis is the fact that we do have this little bit of a bear flag setting up. And again, the way you usually want to measure bear flags, if this one does indeed play out, is you go and measure the pole, right? The top of the bear flag essentially started here. The bottom of the bear flag was here, essentially, right? And then we started, obviously, making that higher lows, higher high bear flag formation, right? And then you take essentially this pole that of the measured move, if you will, and let's just say we do break down somewhere around here. That's not to be perfect, but somewhere around here. You can see that it roughly brings us down to about $280 per share, which is that level that we haven't tested ever, really, ever since breaking out, right? If I zoom out like this, you can see, right? We pretty much have been rejected by this general level right here several times in a row. Many times we've got rejected here. And after we had that massive breakout right over here, right, we actually never came back down to retest that. So if, I'm just saying, I'm not saying this is for sure going to happen. I mean, at the end of the day, it's an earnings and it's a Tesla earnings of all earnings. You never really know, to be completely honest, but it would be a good idea to, at the bare minimum, consider 350s post earnings, bare minimum 350s post earnings. But worst case scenario, which I unironically actually view as quite bullish, if it actually comes down here, I would be buying extremely aggressively if it comes down here. I mean, again, I don't know if it will. 280, right? A natural retest of $280 per share post earnings. Again, not saying literally the day after earnings, could just be a continued sell-off post earnings. Maybe it's instant. I don't know, right? But that would be a decent drop. That would be almost a 25% drop. Now, again, that's worst case scenario, right? I'm not saying that's going to happen for sure. I'm not trying to instill fear. I'm just giving you my honest thoughts, and that's my honest, like, worst case scenario if things were to really go southwards. My more realistic bear case scenario post earnings is about 350 roughly, give or take, of course, right? 340s to 360, somewhere in that $20 range. 340 to 360 would be my like realistic bear case scenario, and my slightly unrealistic bear case scenario is about $280 per share. Now, the bull case scenario, which again, I'm not super favoring, and I'll explain why again very soon, is well, the one that actually can happen is a move back up to about 440 to as high as 460, right? This is the bull case scenario post earnings. We move up somewhere to around this general vicinity, right? Whether it's going to be to the top of this bear flag / rising channel that we are in, and then we ultimately get a massive rejection, or we actually end up essentially coming back up to this essential supply zone back up here, sitting at, again, about $460. That's my two upside targets for Tesla post earnings. Now, if things happen to go extremely bullish and, things just go really damn well, and wow, like fantastic earnings, or something gets announced, whatever the case may be, if the stock decides to react very positively to the earnings, obviously the first thing I'll be looking for is, of course, a break and close above previous all-time highs. And if we see that, that could be, of course, very, very bullish moving forward, but it's a big if, and I'm not going to go ahead and pretend that's going to happen just yet, but that is something to consider, and that will be that would be the same equivalent to about, us dropping to 280, right? The 280 is like my, ultra bear case scenario, I guess you can say, while my ultra bull case scenario will be from here to well above $500 per share, essentially confirming with a close above $490 per share. But my more realistic targets, bull case, about 440 to 460, bear case, 360 to 340, right? Those are my main two targets post earnings. Nobody knows which one's going to happen. I'm not going to sit here and tell you which one it's going to be. I'm not going to pretend like I know. Nobody knows. You don't know. Your mom doesn't know. Your dad doesn't know. Your dog doesn't know. Nobody knows, right? That's the point. Nobody knows, right? It's a game for a reason. But those are the levels to watch out for and be mentally prepared for one direction or the other, however you see fit. Now, why am I a little bit, hesitant on that bullish scenario, like I mentioned, right? Why am I not just expecting Tesla to just rocket well past all-time highs, right? Well into the 500s, even though, again, of course, there's always a possibility. But again, the reason why I personally am not, extremely, I guess, expecting that situation or that scenario is the fact that, we're still very far away from the mean on the weekly chart. Like, we're too far away from the mean on the weekly chart. The mean on the weekly chart currently sits probably around 340, right? I mean, depending on how long it takes us, maybe we'll go there right after earnings. I don't know, but it's currently at about 340, right? Which is that realistic bear case target I just gave you, 340, 360, right? That's currently where it sits. MACD is very much curling downwards. Stochastic is still bearish. RSI is still moving its way downwards, right? So there's these kind of signs, and honestly, the main one, of course, is just essentially being the fact that we're just still far away-ish from the mean reversion, which even from here, it would still be another 13% drop from today's close, roughly, right? I don't like to buy stocks that are too far away from their mean reversion. Let me show you another example, right? Marvell, right? A lot of people were very bullish on Marvell. Even people I highly respect, actually, that were very bullish on Marvell, calling it to go, much like way higher. I think it was like 160 or something like that. I didn't buy it, right? I didn't follow that. Why didn't I follow that? Well, obviously I have my own rules. And my own rule is mainly, I don't like buying stocks, especially a weekly stock that is at the top end of the Bollinger Band. Why? Because, right here, right? Why? Because it's just, the risk reward is just not there for me, right? And now what did it do? It dropped almost 20% with the whole AI sector, or more specifically the chip sector, well back to its mean reversion, and it's pretty much right there. $97 per share, it's at 100. It's pretty much there, right? Worst case scenario, I think this will drop to about 95, and I think this is now becoming a little bit more interesting. I'm getting interested again now. This is where I can potentially look for an opportunity. I'm not saying I am for sure, but if I were to, it's a little bit more understandable now to me, right? As opposed to, of course, all the way up here. So that's just the reason I bring this up, is because Tesla is in a very similar situation, right? Now, I'm not saying it has to drop that much, because, it's a little bit closer to the mean than Marvell was, for instance. But the point I'm just trying to make is the fact that, it's not there though, right? It's not there. Like, it's not where I feel comfortable. Like, it doesn't have to exactly hit 340, but even like 350 to 360 will be pretty damn close to that mean reversion on the weekly. And that's where my strategy, and that's how probably my main way I trade operates, right? So again, that's just my opinion, of course, right? Obviously, do what you will. I could be completely wrong, but you could completely rocket from here. That is a possibility, always a possibility, of course. But that explanation is essentially why I'm not, again, like I said many times, and I will continue saying, I'm not jumping up and down for joy for an absolutely explosive, keyword is explosive, move to the upside, because again, I think the best case scenario is 440 to 460 before ultimately we still end up coming down to revert to the mean at some point or another. It will happen. I don't know how long it'll take. Sometimes it's fast, sometimes it takes a bit longer. It's different every time. But that's where I personally start feeling a lot more comfortable about truly getting bullish. Again, just my opinion, but that's pretty much all I got for you today, right? That's my general consensus on Tesla. Again, it does come down to earnings ultimately. Options flow on Tesla today was actually pretty muted. I think most of the attention was on the chip sector, especially NVIDIA. So not a lot of options flow throughout the day. Tesla's options flow, you can see here, is pretty evenly split from bulls and the bears. And if you go over to confirm bullish or bearish flow, Tesla is actually slightly confirmed bearish flow at 5 million, but again, not a whole lot, pretty much neutral, honestly speaking. So yeah, let's just see how this plays out. Let's see how earnings plays out. I think this is definitely going to require patience. I did actually enter a small bullish position that I am so far up on, closer to the low of the day, not at the lows of the day, of course, but pretty close to it. And I'm riding it, right? I do think we can get a small bounce, like I said, into earnings. I like the way it's kind of looking. I think there's a good risk reward down here short term. I'm probably not holding into earnings. That's just my opinion. Again, I do have a long-term account. If we rocket past earnings, I'm making money. If we drop, yeah, the long-term account will take a hit, but I get to enter on my main account, which is my trading account. Anyways, yeah, that's all I got. Let me know. I'll see you tomorrow. Peace.